How to do technical analysis on any chart in one step. Most important level is 50% of any big impulsive move, which is this line right here. So we're looking at some big impulsive move from the bottom to the top. Here on this gold chart, halfway is this 50% level. Anything above it, up here, you're in a position of strength. Anything below it, down here, you're in a position of weakness. How we're going to do this is we're going to use the Gann chart in the Gann box. Gann was an economist. In 1908, he actually wrote a book on this. In the 1920s, you look for some bottom that's being formed. Here's a couple of bottoms, like 1, 2, 3. Looks like some base is forming, right? We have this Gann box. Grab it from one of the bottoms and drag it all the way to the top of the wick. So what it's doing is breaking up the price moves into these different sections. And then again, 50% here, 50% from here to here. Easy, right? Anything up here, strength. Anything down here, weakness. All right. So if you look, had this big run up from 5,600, slams straight down to the 50% level, almost a perfect wick. Tries to get a dead cat bounce back up. This forms a lower high. Slams down again, straight to the 50% level. Wick, actually wicks on the 0.382 for that day. Gold is respecting the technical charts so well. I mean, this is textbook. Gets a third bounce, kind of like a fake out above the 618, ducks above it, another fake out above it. Again, back to the 50% level. And try to form some base around here for a couple days, seeing if it could accumulate and hold on. At this point, for it to be in a position of strength, you would want to see accumulation and then a move back up. Position of strength. Instead, what happened was accumulated right above this 50% level, got hammered below it. That's it. Game over, guys. Now it's in a position of weakness down here. So then it plunges below the 0.382. When it's below these key levels, you would expect it to test it from below. That's exactly what happened. Look, went back up, tested 50% from below. Once this gets rejected off the 50%, that's it, game over. Then you could see it testing the 0.382 from below and getting rejected. So if you just look at the past year, this has been pretty easy, pretty straightforward. Just watching this 50% level and considering, position of strength versus position of weakness. This is the gold chart. You can do this on any chart. I do this on S&P. I do this on Bitcoin, a lot of commodities. And it's super useful, super important. This is, one of the best indicators I think you could find. If I throw on the 200-day simple moving average, look, it lines up. This is that wicked pretty much off of it here. Then that important breakthrough after the consolidation, busted through this line here. So obviously, when you see many indicators telling you the same thing, that is a sign you should consider the signal more strongly. And